My biggest frustration is finding sellers who are willing to sell at a good price is usually hard. Usually it's really wealthy landowners who know the value and refuse to sell it.
You mentioned you can like 1031 into like oil and gas reserves and that type of thing. So, but what is the biggest frustration that you're running into with the 1031?
So I think some of the biggest frustrations in oil and gas are, one, DSTs are very difficult to do because of the 7 deadly sins. So you have to do them as direct title. So it's a little bit more frustrating because you're titling so many different components to so many holders. I think some of the biggest frustrations that we've had historically, and I think are historically true for the industry, are that there's often a disconnect between buyers and seller in price. There's not always enough sellers when there are buyers at the right price sets, right? So finding that happy medium where sellers will sell at a low enough price that buyers can really make a good arbitrage. It's changed a little bit in the last couple of years because the largest holders of things like minerals were endowments and pensions and universities, because real estate doesn't generate UBTI, right? Unlevered real estate, which is minerals. So they owned the majority share of minerals in the US. Well, the ESG movement has forced them, the environmental social governance, to divest of a lot of these. So now the market's actually really rich with mineral interests, even though the timing should be that they're hard to find because prices are high. There's actually a plethora of them to find because there's so many parties divesting from energy. So there's a lot of sellers out there, which means it's a really good buying opportunity. And normally those two things don't meet, right? That's my biggest frustration, is finding sellers who are willing to sell at a good price is usually hard. Usually it's really wealthy landowners who know the value and refuse to sell it at a reasonable rate for investors, no matter what the markets are doing. Right now, that seems to be kind of a middle ground where you can actually find good. So my biggest frustration historically is that although the tax law always works, you can't always find good investments in the energy space in minerals.
Yeah, and it's a time thing too. Like you don't have that much time to do it.
So yeah, it's so quick. It's so fast. I mean, because but if you're locking down a mineral and you get a good buy, you have 30 days to close. So if you don't have the ability to close 45 million in 30 days, if you don't have enough partners, if you don't, whatever the companies that do it, the timing is very, very tough. It's not something that'll hold on for a long period of time for a closing. If you're going to buy it, you got to buy it quick. You got to have a lot of cash on hand.
So interesting. Okay. So you mentioned that a lot of them, when you're 1031, and so are you using Delaware statutory trust to 1031 into these mineral rights and land? Like, can you do it privately?
Usually it's done privately in the energy space, or they're using a loose LP structure that really is just direct title.
Yeah.
Is that Delaware statutory trust, the odds are you're going to fail one of the 7 deadly sins. So it's a really hard structure in energy to do effectively. Yeah. There are a couple of firms I've seen out there in the US that have done them. So I don't want to speak for everyone, but in general, it's pretty tough to use the DST structure in energy. The master lease thing just doesn't work very well.
Yeah, no, that makes a lot of sense. And I want to clarify something. So when we do a deferred sales trust, it's different than a Delaware statutory trust. Same DST acronym, which Delaware kind of created a little bit after us. But anyway.
No, the deferred sales trust would work. The Delaware statutory trust is a little harder.
Yeah. So speak to how the deferred sales trust is different than something like a Delaware, and how it would pair up with the energy benefits.
I haven't done enough of them to actually be an expert on the almost everything I've seen and been a part of in my history. 20 years has been direct title. So it's just, at the end of the day, when you get through the legalese, it just becomes too difficult. So most of the transactions that I've seen for the last 20 years have actually been direct title.
Interesting.
Yeah.
So just to kind of go back on that a little bit. So the deferred sales trust, what's unique about it, and maybe you can shed some light on it, is that you basically can. It's not technically the same laws or anything like that, but in theory, right? It kind of works like 1031ing into a self-directed IRA account type of thing, right?
As long as the ultimate asset that you buy is, in essence, direct title, right? You're using an intermediary to get there, right? Where you're creating your own, what you call IRA.
You set up it's a business trust. So you set up a business trust that's able to joint venture with you and go in and like invest in other properties, other assets, oil, gas, energy, whatever you want. You can invest in whatever you want. And so as long as it's for business, it's totally good. So, I mean, with that, you're deferring the tax along the way, which is kind of where the IRA concept kind of comes in, right? You can kind of self-direct it a little bit, which is kind of where like the self-directed part comes in. You have to use a kind of like a intermediary, which is kind of where like the 1031 part comes in. So there's all these different things. It's a hodgepodge meld of a bunch of different like, things that has its own tax law and everything. And you guys can learn more about that at Capital Gains Tax Solutions.
I'll actually call you and we'll talk about that. So
yeah, absolutely.